Hello, everyone. Darren at Leviathan here. Welcome to a new week, which is shorter because we had a holiday yesterday here in the US. And so the start of summer begins with the wonderful news that the war is nearly over. So the main take has obviously been that US President Trump posted an agreement has been largely negotiated, subject to finalization between the US and Iran and various Middle East countries, while the final aspects and details of the deal were being discussed and will be announced shortly, stating the negotiations are proceeding in an orderly and constructive manner, while he informed his own representatives not to rush into a deal and the time's on their side. So, uh, obviously, a lot of relief on that initially. Oil had got down as far as 89.40. And however, since then we've had various, military operation by the US, Iran, Iran responding uh, with that, their usual bluster. So we've come back off the highs. With oil now trading down $3.64, WTI at 93 bucks ish. 10-year, however, has had a great start. We're actually remain not far off the highs there, 109.28, just off the high of 110 the figure, and yielding 4.476 at the moment. Quite considerably lower, breaking through that 4.5 level. So that's pretty bullish. However, it should be of note that we are still trading in the short term. D6 here, you see here, trading 12, 12 and a half. That's still around the 90% mark that we're going to get a hike before the end of the year. This is kind of in line with what we're seeing come out of the ECB, where ECB Slipen has just recently said that the ECB is somewhere between baseline and adverse scenarios, and the ECB will do everything in its power to tame inflation. So that's implying that they're definitely on the hike cycle mentality there. Going back, we will look at lunchtime again. We were looking at some of these trades, and we'll go in as to see where they're pricing at the moment. I like some of these flyers, specifically this downside condor. Going to focus on that one today. That's the 56 plus 7 plus 8 plus O plus book condor. That would cover an implication of 2 hikes by the end of the year. Again, this is not that they have to do the 2 hikes, just the implication that they will at least do that and have that built into within the start of 2027 as well. You don't actually, for these contracts, have to have 2 hikes priced in to actually happen for it to be trading there. It's a forward-looking loan, so we'll cover a January meeting as well. In the meantime, stock market, you're going to come in is up 0.6%, at 75.34. Not exactly far off its all-time highs, and flying in the face of all the fixed income action. Keep an eye on this chart here. It's a 5-year, 30-year chart. As you can see here, it's previously tracked the S&P pretty well, with various dips coinciding and rallies coinciding. Here, however, with this coming down lower, the stock market has been decoupled slightly and is off doing its own thing. Personally, still think it may have a bit more upside to go, but it should probably have a correction if the current administration would allow. I think it's pretty healthy to do so, and at the end of the day, you have to be pretty excited about the prospects of AI to warrant putting your money there, as opposed to a fixed asset that can guarantee you 4.5% return without you having to do anything. As far as the rest of the week goes in earnings, yeah, I mean, we've got Dick's Sporting Goods, BMO coming out on Wednesday, Best Buy, Dell could be interesting, and Costco on Thursday with a light one on Friday in the shortened week. So there you go. That's your opening news. And as always, better be lucky than be good. So good luck to you all. Have a great day trading.